management. Today we will be discussing social, ethical, and legal issues in selling. Sales personnel constantly are involved with social, ethical, and legal issues. And if you think about it, well, everyone faces such a situation, just like you and me. So we'll be covering the following topics for today. First one is the management's social responsibilities. The other one is an organization's main responsibilities, ethics and personal selling, what is ethical dilemma, and managing sales ethics. So this chapter addresses many of the important social, ethical, and legal issues in selling. And it begins by discussing management social responsibilities. Then it will examine social or ethical behavior, followed by the ethical issues involved in dealing with salespeople, employers, and consumers. And the chapter ends by presenting ways an organization can help its sales personnel follow ethical selling practices. Now, let's look at the management social responsibility. Now, to define social responsibility, it is the management's obligation to make choices and take actions that contribute to the welfare and interests of society as well as to those of the organization. An organization's environment is a major influence on how the firm sells its products. As straightforward as its definition seems, well, social responsibility can be a difficult concept to grasp because different people have different opinions as to which actions improve society's welfare. And to make matters worse, social responsibility covers a range of issues, many of which have ambiguous boundaries between right and wrong. One reason for the difficulty in understanding social responsibility is that managers must confront the question responsibility to whom? The organization's environment consists of several sectors, both inside and outside the organization. So, from a social responsibility perspective, enlightened organizations view the internal and external environment as a variety of stakeholders. So let's look at the organization stakeholders. Well, a stakeholder is any group within or outside of the organization that has a stake in the organization's performance. So each stakeholder has a different interest in the organization. Now, let's look at the primary and secondary stakeholders. So the primary stakeholders includes owners or stockholders, employees, customers, and suppliers, while the secondary stakeholders involves the community, creditors, government, and special groups. After knowing the stakeholders of the organization, let's look at the main responsibilities of an organization. And these main responsibilities includes one, the economic business or an organization must be profitable. The business institution is, above all, the basic economic unit of society. Its responsibility is to produce the goods and services that society wants and to maximize profits for its owners and shareholders. Businesses have a responsibility to make a profit to serve society. Imagine what would happen to our society if large corporations did not make a profit and went out of business. It will affect the people who are working and in turn affect the economy, just like what happened here in this pandemic. Secondly, an organization must obey the law. Legal responsibility defines what society deems as important with respect to appropriate corporate behavior. Organizations are expected to fulfill their economic goals within the legal framework. Legal requirements are imposed by local government units or LGUs and also the national government. The third one is to be ethical or to do what is right. Ethical responsibility includes behaviors that are not necessarily codified into law and may not serve the corporate's direct economic interests. To be ethical, organizational decision should act with equity, fairness, and impartiality. respect the rights of individuals, and provide different treatment of individuals only when relevant to the organization's goals and tasks. Now, unethical behavior uh, occurs when decisions enable an individual or company to gain at the expense of society. And the fourth responsibility of an organization is discretionary, meaning to contribute to community and quality of life. Now, when we talk about discretionary responsibility, it is purely voluntary and guided by a company's desire to make social contributions, not mandated by economics or law or ethics. Discretionary activities include generous philanthropic contributions that offer no monetary return to the company and are not expected. Discretionary responsibility is the highest criterion of social responsibility because it goes beyond societal expectations to contribute to the community's welfare. Now let's look at ways to demonstrate social responsibility. A corporation can demonstrate social responsibility in numerous ways. This includes, number one, taking corrective action before it is required, and also working with affected constituents to resolve mutual problems. Another one is working to establish industry-wide standards and self-regulation, publicly admitting mistakes, getting involved in appropriate social programs. Another one is helping correct environmental problems and also monitoring the changing social environment. Another thing is establishing and enforcing a corporate code of conduct, and also taking needed public stands on social issues, and finally, striving to make profits on an ongoing basis. Now, let's look at what influences ethical behaviors. First one is the individual role or individual's role, the role of the individual. Now, we need to understand that organizations are composed of individuals, and these individuals' morals and ethical values help shape those of the organization. Critical to making decisions is in an ethical manner is the individual's integrity of the organization's manager, especially those in top management positions. Thus, two major influences on the ethical behavior of sales personnel are employees and the organizations itself. So let's look at the individual's role. There are three levels when we talk about individual's role in the ethical behavior. The first one is level one, or known as pre-conventional. Now, an individual or personality, we need to understand personality, religious background, family upbringing, personal experiences, and the situation faced are examples of factors shaping our core belief system. This is why you hear no two people are alike. So each one views the world differently than someone else. So when we talk about level one, it is an individual's or individual acts in his or her own best interest, and thus follows rules to avoid punishment or receive rewards. This individual would break moral and legal laws in making an ethical or moral decision. A salesperson at this level might ask, what can I get away with, or how can I get away with an unethical action? Level 2, on the other hand, which is known as conventional, the individual conforms to the expectations of others, such as family, friends, employer, boss, or society, and upholds moral and legal law. Now, with level 2, salesperson at this level might ask, what am I legally required to do when making an ethical or moral decision? And then level 3, principle, the individual lives by an internal set of moral values, or morals, values, and ethics regardless of punishments or majority of opinion. So with level 3, the individual would disobey orders, laws, and consequences to follow what he or she believes is right. This person follows the golden rule. When making an ethical or moral decision, a salesperson at this level might ask, what is the right thing to do? So the majority of sales personnel, as well as people in general, operate at the conventional level. However, few individuals are at level 1, and it is estimated that less than 20% of individuals reach level 3. Now let's look at the organization's role in the ethical behavior of sales personnel. Well, at best, most employees in firm operate at level 2. And the question now here is, how will employees handle situations if no policies are imposed? This is the reason why policies and code of ethics are very important in every organization. So the development of sales personnel's moral character can be crucial to a company. So the golden rule of selling requires people whose personal character is at level 3, who have caring attitudes and recognize the rights of others, and who act based on personal, independently defined universal principles of justice and values. Now, let's look at the management's ethical responsibility. As principles of ethics and social responsibility are more widely recognized, companies can use codes of ethics and their corporate cultures to govern behavior, thereby eliminating the need for additional laws governing right and wrong. Now, the concept of ethics, like that of social responsibility, is easy to understand. However, ethics is difficult to define in a precise way. In a general sense, ethics are the codes of moral principles and values that govern the behaviors of a person or a group with respect to what is right or wrong. Ethics set standards for what is good or bad in conduct and decision making. Now, we need to understand that many companies and their sales personnel get into trouble by making the mistaken assumption that if it is not legal, it must be ethical, or what if, sorry, making the mistaken assumption that if it's not illegal, it must be ethical. Ethics and moral values are a powerful force for good that can regulate behaviors both inside and outside the sales force. Now, let's look at ethics and personal selling. Ethics are the principles governing behavior of an individual or a group. These principles establish appropriate behavior, indicating what is right and wrong, while ethical behavior refers to treating others fairly. So, what is ethical can vary from country to country and industry to industry, meaning to say that there are certain ethical behaviors that is different from in one country and different to another country or industry to another industry. So, examples of ethical behavior. One is being honest and truthful. Another example is maintaining confidence and trust, following the rules, conducting yourself in the proper manner, treating others fairly, demonstrating loyalty to company and associates, and also carrying your share of the work and responsibility with 100% effort. Now, what about ethics and partnering relationship? We need to look into the manipulation that eliminates or reduces the buyer's choice unfairly. And also we can see here the persuasion. Persuasion is trying to influence the buyer's decision and not force it. So this is in relation to the customers or our end users of our products or our services, and how we convince them to buy or avail of our products or services. Now, these are factors affecting ethical behaviors of salespeople. So, we can see here the different factors like social norms, personal goals, company policies, and also laws, values of significant others, and also, of course, the personal code of ethics of the individual. With all these factors, it will result whether to ethical behavior or an unethical behavior. It depends on the factors affecting the individual or the sales personnel. Now, let's look at the conflicting objectives between company, salesperson, and customer objectives. We can see here in the company objectives, their emphasis is to increase profits, increase sales, reduce sales costs, build long-term, customer relationships, and avoid legal trouble. In contrast or in comparison with the objectives of salesperson and customer objectives, when you compare and differentiate these different objectives, of course, there will be conflicts that may happen because these objectives are different from each other. Now, let's look at the choices you can make if your manager asks you to act unethically. So, what are you going to do if your manager will ask you to act or to do something that is unethical? First one is either you ignore your personal values and do what your company asks you to do. So, you will set aside your principles or your values. Another option that you can do is to take a stand and tell your manager or your employer what you think. And then thirdly, refuse to compromise your principles. These are the options that you can do or yeah, the options that you can do when your manager or your employer is asking you to do something that is unethical. Let's look at the checklists for making ethical decisions. These are questions that you can check if your decisions is ethical or not. So, number one, would I be embarrassed if a customer found out about this behavior? Another question that you can ask, would my supervisor disapprove of this behavior? Another question that you can ask is, would most people feel that this behavior is unusual? Am I about to do this because I think I can get away with it? Another guide that you can ask is, would I be upset if a salesperson did this to me? Would my family or friends think less of me if I told them about engaging in the sales activity? Or another question, am I concerned about the possible consequences of this behavior? And another thing is, would I be upset if this behavior or activity were publicized in a newspaper article? And lastly, the question that you can ask is, would society be worse off if everyone engaged in this behavior or activity? So the definition of ethical behavior, while reasonably specific and easy to understand, is difficult to apply in every situation. In real life, there are always conflicting viewpoints, fuzzy circumstances, and unclear positions. Though difficult, it is critically important to cut through the smoke screen that sometimes exists in such a situation and use a 2020 vision to make an ethical choice. After knowing the responsibilities of an organization and also what are the factors that contribute to the individual's ethical behavior or salesperson's ethical behavior, let us look at the ethical dilemma. What is an ethical dilemma? An ethical dilemma is a situation in which alternative choice or behavior has some undesirable elements due to potentially negative ethical or personal consequences. Example of which is, what if a customer or asking for information about one of their competitors who happens to be one of your customers? This is an example of an ethical dilemma. And also, what if a supplier will give you an incentive if you will choose them as your suppliers? Managers must deal with this kinds of dilemmas and issues that fall squarely in the domain of ethics. Now, let's look at the three main ethical areas where sales personnel face most frequently, and this involves salespeople, employer, and customers. So, ethics in dealing with salespeople. There are 5 ethical considerations faced by sales managers. Sales managers have both social and ethical responsibilities to sales personnel. And salespeople are a valuable resource. They are recruited, carefully trained, and given important responsibility. They have or they represent a large financial investment and must be treated in a professional manner. Yet, occasionally, a company may place managers and or salespeople in positions that force them to choose among compromising their ethics, not doing what is required, or leaving the organization. So what are these 5 ethical considerations? One is the level of sales pressure. Uh, when we talk about level of sales pressure, what is an acceptable level of pressure to place on salespeople? Another question that we should ask, should the manager lower sales goals? Should the manager acknowledge what goals were set too high? Was it too high or too low? However, managers should set realistic and obtainable goals so that the pressure that is given on salespeople will not be too much. And then the second one is decision affecting territory. Well, management makes decisions that affect sales territories and salespeople. For example, the company might increase the number of sales territories, which often necessitates splitting a single territory. A salesperson may have spent years building the territory to its current sales volume, only to have customers taken away. So if the salesperson has worked on commission, this would mean a decrease in earnings. So this is another consideration that must be thought of by the managers. Thirdly, to tell the truth or not. Should salespeople be told they are not promotable, that they are marginable performers, or that they are transferred to the poorest territory in the company so that they will quit? Now, good judgment must prevail. Sales manager, this is very important that sales managers prefer or must prefer to tell the truth. The fourth one is the salesperson. So the ill salesperson, another ethical consideration faced by sales manager, and the firm cannot have intoxicated or high salesperson calling on customers. Once the illness has a negative effect on business, the salesperson is taken out of the territory. Sick leave and workers' compensation often covers expenses until the salesperson recovers. Now, the manager who shows a sincere personal interest in helping the ill salesperson greatly contributes to the person's chances of recovery. And of course, the last one is the employee's rights. Employees' rights. Uh, the sales manager must be current on ethical and legal considerations regarding employee rights or employees' rights, and must develop strategies for the organization in addressing those rights. Some of these rights is, of course, the termination at will, privacy, and harassment. So when we talk about termination at will, though companies have the right to terminate employees for none or for performance or any offenses that they have committed, certain laws must still be observed. Otherwise, cases can be filed in the Department of Labor and Employment for legal termination. And when we talk about privacy, well, personnel files, the files of personnel or staff must be protected and must not be distributed without their consent. And about harassment, employees have the right to be not to be discriminated against in employment practices and decision. But it also means that employees have the right to be free from, let's say, social or sexual harassment or racial discrimination. So these are the ethical considerations that are faced by sales manager. Now, what about salespeople's ethics in dealing with their employers? So, first one is misusing company assets. Company assets most often misused are the example of company assets that are often misused are automobiles, expense accounts, samples, and damaged merchandise credits. All can be used for personal gain or as bribes and kickbacks to customers. Another one is moonlighting. Now, when we talk about moonlighting refers to the practice of working a second job outside normal business hours or even during his office hours. Therefore, an employee may work a normal 9 to 5 job as a primary source of income but work nights at a different job in order to earn extra money. There's nothing wrong with having another job other than your job, but that second job must not be done during your normal job. right? Because otherwise it will violate, or it will be unfair to the organization where you are working. The next one is cheating. Cheating can be done through commissions or sales, especially if there are flaws in the system. And there are so many instances where salespeople, right, committed cheating, right? And then the fourth one is affecting other salespeople. Now, affecting other salespeople can be done by getting the customers or prospects of other sales personnel. So our actions, or the actions of salespeople, if they get the customers of their co-salesperson, well, that will affect, right, the sales of the other sales personnel. And of course, the what we call the technology theft. Technology theft can be described as a scheme where different activities are conducted by one or more thieves in order to steal techniques, resources, or devices with the aim of obtaining personal benefits from those actions. So another way is to steal the names. Another example of technology theft is to steal the list of names of customers or important data and use it in personal business. Now, what about ethics in dealing with customers? Right? So the first one is about bribes. Now, a bribe occurs when one entity illegally offers money or something else of value to sway or influence some decision or process. It's either the customer bribes the salesperson to give something in return. And another one is misrepresentation. Misrepresentation occurs when you falsely something or falsify something in order to sell your business or achieve a higher sales price. Now, even if the purchase itself is not reversed, the seller may owe damages or other reparations because of the misrepresentation. And the other one, as far as ethics in dealing with customers, is what we call the tie-in sales. Tie-in sales includes to buy example is to buy a particular line of merchandise. A buyer may be required to buy other unwanted products. We see this most often in supermarkets. And the other one is price discrimination. Now, price discrimination, an example of this is selling the same quantity of the same product to different buyers at different prices. Well, this is unethical because the same product must be sold to other customers at the same price, right? So let's also, as far as the social, ethical, and legal issues in selling, we must also consider the international side of ethics. Now, we need to understand that guidelines for conducting international business may be different or even non-existent, especially now when globalization is really in full bloom. We need to learn about the international laws that covers businesses, okay? And it is important to keep up to date on the laws of a country and be aware of how authorized representatives are conducting business, because laws are or differs from one country to another. Practices or even culture or certain limitations are different from one country to another. Another thing that must be considered is how are we going to manage sales ethics? And here are some of suggestions that we can do in managing sales ethics. The first one is to follow the organization's leader. Now, organization's chief executive officer or CEO of the president, the vice president, and the top management, they should clearly champion the efforts for ethical conduct, because whether we like it or not, sales personnel will follow what their leaders or the top management is doing. So the management, the top management, the people in top management must clearly observe and conduct themselves in an ethical manner. The next one is leader selection is important. Since so few individuals are at the principled level of moral development, it is critical to carefully choose managers. Only people who have the highest level of integrity, standards, and values should assume leadership positions. Otherwise, you will encounter problem if you choose managers with unquestionable behavior. Thirdly, establish code of ethics. A code of ethics is a formal statement of the company's values concerning ethics and social issues. If it states those values or behaviors that are expected and those that are not tolerated, these values and behaviors must be backed by management's action. Without top management support, there is little assurance that the code will be followed. That's why it's very important that the management, the people in management, must clearly observe and must champion the ethical behavior. The next suggestion is to create ethical structures. An ethics committee, it's very important, no, to establish ethics committee, which is a group of executives appointed to oversee company ethics. This particular committee provides rulings on questionable ethical issues. The ethics committee assumes responsibility for disciplining wrongdoers. And then the next one is encourage whistleblowing. Employee disclosure or of illegal, immoral, or illegitimate practices on the employer's part is called whistleblowing. Now, companies can provide a mechanism for whistleblowing as a matter of policy. All employees who observe or become aware of criminal practices or unethical behavior should be encouraged to report the incident to their superiors or to a higher level of management or to an appropriate unit of the organization, such as the ethics committee. And then the next suggestion is create an ethical sales climate. The single most important factor in improving the climate for ethical behavior in a sales force is the action taken by top level managers. Sales managers must help develop and support their codes of ethics. And lastly, establish control systems. Control systems must be established. This is very important, and methods should be employed to determine whether salespeople give bribes, falsify reports, or pad expenses. Because if there is no system of control or control system, sales personnel can find a leeway, or it can be a leeway for them to practice unethical behavior or actions. These are the summary. After all the things, let's look at the summary of the major selling issues that we have covered. First one is ethical behavior pertains to values of right and wrong. Ethical decisions and behavior are typically guided by a value system. Another part of what we have discussed, an important individual characteristic, is one's level of moral development. In corporate culture, is an organizational characteristic that influences ethical behavior. And as part of what we have covered is just it's about social responsibility. In business means profitably serving employees and customers in an ethical and lawful manners. Then also ethical standards and guidelines for sales personnel must be developed, supported, and policed. And lastly, research suggests that socially responsible organizations perform as well as and often better than organizations that are not socially responsible. So thank you for listening. Thank you for attending, and have a blessed day ahead. God bless you.